Hi, this is Sankar Sharma. In this video, we want to talk about IBM. We're going to take a deep dive into IBM numbers, analyze the chart, and do the complete all the analysis required to see if IBM right now is at a good point to buy or to add to the existing position, or whether we need to be cautious. Let's answer all those questions. By no means is a buy or sell recommendation. It is just analysis for you so that you can take it and make use of it and undo your own further analysis. So I'm trying to do all heavy lifting for you so it can simplify your decision making. So without further delay, let's go and analyze everything we want to discuss. First things first, we take you to the screen. So if you look at IBM, currently it's at 232.75. It just made an announcement of its earnings and stock actually went down. So let's go and see what's going on with it. So it's giving a dividend of 2.88. Currently, price to earnings ratio is 25.6, which is just about right. It means it's not too overpriced or not underpriced. Just a little bit, a touch on the higher side. So the company operates through 5 segments: cognitive solution, global business, technology service, cloud platform, system, and global financing. Now, if you look at quarterly numbers of its performance, you can see between the 2 quarters, the net income has improved, revenue has improved, margin is just a tad bit better. That is good. If you look at these numbers, the debt has come down, free cash flow also has come down, cash equivalents have come down as well. So that is okay. Now let's go and crunch the numbers. If you see the statements, cash flow, first of all, there is a dip in cash from financing activities. So this green numbers indicate it is putting money to grow the company. This probably means it's either doing a cash buyback, stock buyback, or spending on paying off the debts. That's what those two negative numbers means. So operating activities, cash came negative this time, and that is because IBM made it clear in their like CEO gave an interview and he mentioned the reason for that. IBM is saying the money they earn from sending consultants has gone down. So the consultants who earn money, that part of it has gone down. But their artificial intelligence wing is making more money than anticipated. So now that means we should probably expect 3 to 4 quarters of negative cash from operating activities, which means it could still affect its next quarter's earnings if the AI doesn't take off a lot faster than they're anticipating and cover the monies that they lost because of slack in hiring IBM labor by the other companies. So that also means they will have a choice, either try to make sure that the existing staff can bring in more revenue to the company, or they may have to cut some jobs. That's what that is telling us. So how do they go about doing that? We don't know yet. So we'll have to wait and see. They might, if they have a good amount of skill set that they can transition to AI, then they might avoid it. But that is what that number is saying. I'm not suggesting there are job losses coming, but I'm only seeing what the numbers are implying. If you look at a balance sheet, it just about scraped. No, the liabilities, sorry, that is liabilities going down, which is good news. Assets going up, which is good news. Total equity is positive. That is excellent news. So equity wise is positive. That basically means that if you go and check here, the assets or 133 billion liabilities of 109. That means they have enough money to pay off any debts or demands or any labor costs. So they don't have a shortage of cash to sustain. So sustainability is not an issue. Profitability is what we are looking at, and earnings and growth and revenue growth is what we are talking about. That's our concern. So that means in the short term, the stock might come down and maybe stay sideways before we see positive bump in their labor hiring activities and also in overall earnings per share and revenues. So if they improve, those metrics improve next time, we're probably going to see higher prices for IBM. For short term, it could be under pressure. That's what it is saying. So we may see some sell-off on IBM. Now, we'll check the income statement and then go look at the chart. If you look at the income statement, it looks healthy. Everything is green. Hunky dory, revenue, gross profit, operating income, pre-tax, all are nice and negative, and they're all kind of somehow improving. And you see those numbers, everything is improving. That is good. Net income is improving, positive. EBITDA is improving. Total operating expenses are pretty much in control. That is good news. So overall, it's not in a bad place, but we may see a short-term sell-off in the stock until probably next quarter. But let's go and check and see what the charts are telling us. So IBM had been in a nice uptrend since last time when they were made a great earnings. So if you look at last time, they had a good surprise on the earnings, surprise on the revenue. If you look at this time, they had negative surprise on the revenue and okay surprise on the earnings. So that means we could see the stock coming off either to 225 level or even 215. If it doesn't hold, it's going to come down all down to this zone here between 192 and 200. So you have 3 levels to watch. If it breaks this nice trend zone, it's going to come down here. If it breaks that, it's going to come down here. If it breaks that, it's going to go down there. So those are 3 levels to watch out, and everything might trigger once it falls below this green trend zone. As long as it stays above, everything is okay. If it breaks this trend line, trend zone, we have trouble. We may see some sell-off. Hopefully that's useful. This is Sankar Sharma signing off. Don't forget to subscribe to this channel, and I'll see you in the next video. Thank you. Bye for now.